Thanks everyone for being here at the USA Crypto Group, attending this very, very exciting AMA session. Today we have Owners Unity team with us today. Owners Unity is set out to revolutionize the way people purchase real estate by utilizing the blockchain and connecting it to the real world. Like always, this AMA session is for research purposes only. This is not financial advice, and there's no commitment to the team. With that, I'd like to welcome Das from Owners Unity. Das, if you can start out, introduce yourself, your position. Then after that, I'd like to also hear about your team as well.
Yeah, hi, thanks. Thanks for having us. It's great to be here. Yeah, my real name's Scott. We're fully doxed. So, you know, my real name's Scott Shearer. I'm 53. I've run my own business consultancy since 2013. Prior to that, I've always worked in, you know, construction, project management, those kinds of things. Friend of mine in 2011 said to me, "Yeah, there's this new thing called Bitcoin. Do you want to have a look at it?" And, you know, in my wisdom, I said, "No, I don't think it will catch on." But then 2018, I bought Cardano, was the first token I purchased, and I've been sort of like around the space ever since. And that's me. And I'll let the other members of the team introduce themselves.
Yeah, thanks for that, Scott. So if there's any team member from the project, go ahead and unmute yourself.
Yeah, this is Tyson. I'm a advisory role with Owners Unity. I'm actually a real estate agent here in the United States, Midwest, Kansas City area. So I'm kind of just on the team to kind of help out, especially this is a, you know, worldwide group, but, you know, I'm kind of on the side of an early investor like everybody else that's into it, but kind of brought on board to help with, you know, kind of just the scheduling and putting stuff together as far as the real estate side, you know, helping with the transition of people understanding what Owners Unity token is and what we're doing. And then just kind of overall helping with the education side of real estate. So happy to be here. Crypto space stuff I've been in since, probably 2018 or so, 2019. Got in with Doge, dabbled in a few other stuff. Similar to Scott, heard about Bitcoin, didn't really get into it, of course, heard about a few others as ETH and everything else kind of came aboard and kind of kept saying no, and then finally kind of bit the bullet, started getting into it, and then just realized how far it can really, you know, take things. So happy to answer any questions that I can and happy to be on. Thanks for having us, guys.
Is that all the members from your team here, Scott?
Yeah, Simon, are you there?
Hi, guys. Can you hear me?
Hey, Simon. Yes, we can hear you.
Yeah, great. Yeah. Hi, I'm Simon Henderson. I own a real estate company in the north of England. Scott approached me a while back with a concept. I know or knew, shall we say, absolutely nothing about Bitcoin whatsoever until very, very recently. And the conversation that Scott and I had with regards to this, I was extremely intrigued by. So with what Scott proposed and what the likes of myself and Tyson have in the background, it was a very happy fit for me. My expertise came from 25 years of management and 18 years of real estate. So what I bring to the table is as simple as that.
Awesome.
Cheers,
Thanks for that, Simon.
Harvey's here.
I think Harvey just joined us. I just saw him came in here. Hey, Harvey.
He's probably forgot to unmute his mic. He's a classic at doing that. So, but there's, I think, Lawgiver and Plurts. Are you guys in the room?
My name's Jeremy. I'm one of the mods also.
Hey, Jeremy. Great to have you.
How's it going, man?
Going very well. So we can go ahead and skip to the next person. If I think Harvey may have a connection problem there, I see. If anyone else...
Yeah, I can give you a brief overview. Harvey, by the way, I've known Simon for about 15 years as well. So these are people that I've known for a long time. Harvey, I've also known for nigh on 15, 20 years. He's our formula guy. He's a mathematician. He's, been around numbers his entire life. He's also run 3 businesses in the past, so he has business acumen. And we've also, hopefully, somewhere about Lawgiver. He might be here, he might be joining later. Plurts is another member of the team who I think it's about. But those guys sort of jump on as and when they can. Paul, who's the CMO, he's in Thailand at the moment, so he's getting his beauty sleep. So that's the team that's on will be the team that you deal with.
Awesome. Thanks for that, Scott. Yeah, I mean, looking at your website, you guys have a massive team with extensive experience that's related to your concept here. So I think that's very crucial. Kind of like what Harvey said, looks like you actually right now, currently you have a real estate business and you've been in property management for 25 years or 25 years. I think that's a great thing. I think that's an amazing background for what you guys are doing. And so I'm imagining, because, when I look at this project here, I there's a lot of numbers that are not displayed yet, but I imagine that Harvey is the kind of like the CPA guy, the financial guy behind door. Is that who he is?
We have different financial advisors. It's just obviously certain members of the team can't be doxed because of their existing roles as is. So everyone that is not going to get fired for being involved and doxing are doxed, and the people that can't dox obviously aren't.
I understand. Okay, sounds great. Now, what you guys' mission is to revolutionize the way people own homes. If you guys can give us some insights of the problems that you see exist currently, that kind of motivate you guys to come up with this concept, and also an overview of the solutions that you guys have in place to tackle these issues.
Yeah, sure. That'll be fine. I mean, every large and successful business starts with a large problem to solve. Owners Unity, we've decided to take on one of the most urgent problems that we believe is out there. And I think you can agree that no matter which country or continent you are from, there is a global housing crisis, which is getting worse every day. Prices are going up, wages are going down, so there is a real world impact, and there's a lot of figures around it, and I don't want to go into too much depth with the figures because you can lose the woods for the trees, so to speak. But just a couple of very brief examples. In the UK, as of 2021, the average house price is 65 times higher than 1970, and that's in accordance to the ONS, which is the Office of National Statistics. But the average wage is only 36 times higher. So 65 times higher for the price, 36 times higher for the wages. And in the UK, house prices rose by 10.2% in the year to 2021, which was the highest annual growth since August 2007. For you guys in America, for instance, Cleveland, in the USA, the average price of a square foot of real estate jumped 134% in 5 years, whilst the average salary rose only about 37%. NBC News, a consumer finance company called Bankrate, that's a more American thing than we have over here, but they revealed that a new mortgage rate on a $400,000 home on the 1st of January this year was $1,745 per month, and today that figure has increased by $580 more. So your average family doesn't really have the capability of finding those kind of additional funds, and it's unsustainable. And the onslaught's going to leave millions of families globally being unavailable to afford their home, and that's where we look to step in with our driving mission statements, which are: everyone has the right to a decent standard of living, and everyone has the right to a decent standard of home. Now, whilst we aim to revolutionise the way that the world provides affordable property, there are just a couple of things I need to clarify. I found this out through Tyson and others. Affordable housing means different things in different parts of the world. It's not the same as affordable housing just in the US, which I believe is sort of like the projects and that kind of thing is what's classed as affordable housing. We just mean by affordable housing that if you earn a certain amount of money, you should be able to afford a decent home still. That's the kind of thing that we mean by affordable housing. The way that we've come up with doing this is literally, like it says there, we look at the person, not the history. So if you've been paying, your rent regularly over a period of time, but you've had a parking ticket or you've been looking for a mortgage, which can impact your credit rating negatively. A lot of people are still unaware of that, and that can impact your ability to gain a mortgage, especially with what's happened currently with the pandemic. There's a lot of people out there whose credit ratings have been adversely affected. In countries like America, where you don't have a national health service, a lot of people are left stuck between, having to pay medical bills or paying your rent. So if you have a medical emergency or something like that, that can also impact your finances adversely. And what we're looking to do is just to make these things not so important, and to see the individual and not just see people as algorithms. So the Owner's Unity Payment Plan is designed to put some humanity back into the whole system and the whole process. If you've been paying rent, a lot of people don't then have the ability to make the savings to get a mortgage. So it's also a trap, a situation, which is what we're trying to avoid. So it means more people will gain access to the possibility of owning their own properties, which means people don't have to rent for years to try and save, if possible, just for the deposit to access a mortgage. Through our reward system, our unique tokenomics system also helps reduce the amount of time it can take to own a property, and reduce it. I think it's 30 years is the average at the moment. When we started back in the day, it was like 20 years, then it went up to 25, now it's 30. In the UK and in certain other countries, they even look at such things as generational mortgages. So, you can take a mortgage out and then pass it on to your kids, which is not something that we really believe that people should be looking to do. But what I want to clarify, I think is key to clarify, we are looking to fuse together the real world and crypto. So our project is a hybrid / transitionary product, because we're looking to impact people in a way that shows how crypto can benefit them in their average everyday lives. And therefore, we're hoping that will mainstream crypto and also drive adoption across the board, and actually take crypto forward and bring it into the realms of a real world currency that's actually used, utilized and functionable in everyday life. And the housing aspect of this is only one aspect of the project. It does good, but as an investor, the key thing to remember for a lot of people is that you can receive up to 7 passive revenue streams. And whilst the housing is one avenue or one utility, we also have an energy brokerage, which will be running before launch in the real world. That is another revenue stream that goes into our system. We also have KYC, CVP it's called, Client Verification Protocol, which is another utility which will be up and running prior to launch. And we also have staking that will be available prior to launch. So Owners Unity will have 3 utilities, 2 in the crypto space and 1 in the real world, functioning utilities that will be generating revenue prior to us launching. So it's not just us doing the housing aspect of it, although that's important to us. For you guys as investors, it's also the fact that we generate multiple revenue streams that will then return up to 7 passive income streams for you guys for holding the token. So that's another thing that we feel is important. Also, to clarify, there's 0 leverage, no loaning money. We don't loan money. There's 0 interest on our properties. So if someone wants a property that costs $100,000, for instance, all they end up paying is the $100,000 plus whatever solicitors' fees, etc., that it costs to transfer title deeds, etc. So they're not then paying 2, 3, 4% interest on whether it's fixed or variable that you would have with a traditional mortgage. So that's another aspect that we like people to look at, and that pretty much outlines it. The way it came about, like I said, I've been involved in construction project management most of my life. Obviously, you sit down with friends who complain about mortgages and the system being broken, especially after the crash. And we tried to think of ways to get it running, but obviously when you're looking to start a system like this, the powers that be don't want to assist you too much, because they can obviously see how this could be a threat in the long term. Then with the invention of crypto and the growth of crypto, it gave us the opportunity to fuse the 2 aspects together. Us guys on the team, we all believe crypto is the future due to its nature and how it can function. And that's why we come up with the hybrid model that you see, that I've outlined very briefly. And this is what we're looking to move forward with, and obviously to attach additional strings to our bow. So we bring in additional revenue, which will then give you guys more returns for your buck. but also assist more people in moving into properties and getting on the property ladder. And I'm sure we will touch on the tokenomics and everything in greater depth, but that's sort of like an overview of who we are and what we are hoping to achieve.
Yeah, thanks for that overview there, Scott. And you're right. Over in the U.S., thanks for clarifying that. But oftentimes we use the term affordable housing in projects, right? In the ghetto, like some people would put it. So thanks for clarifying that. But you're 100% correct. I think housing affordability is an issue over here, especially since the downfall of the bank system, back then, right? And so now everything is the banks are tying up the processes on lending out money and who can get the mortgage, etc. Because there's a lot of process that you have to go through in order for you to afford a home, like credit check, credit history, cash deposit. And also, like you said, one thing that you mentioned that's actually really interesting is that you say that you guys do not have interest, and that, let's say if I borrow 100K, like you said, for example, so you're pretty much paying off the principal of that 100,000 only. Is that correct there, Scott?
Yeah, it is correct. Part of what we're doing, and this is another trap that people fall into, so I'll try and clarify it very early on, is we're not lending any money. So if you can try and look at the concept without there being any kind of loaning, lending in it, so it would be a property that you would move into. If we was in a pub together drinking and you asked me to explain this concept to you, I would say the closest thing on the market at the moment is a rent to buy. It's not a rent to buy, but that's the closest thing on the market. So it would give you an understanding of how the process works in its simplest, most basic form. And the reason why it's so beautiful in its simplicity is because it can be utilized anywhere in the world. Anywhere that you can rent or buy a property, this product can be utilized. But again, we also have other utility that brings in revenue for you guys as investors.
Okay, perfect. So before we go into the tokenomics, I do have a follow-up questions on that with what you said there. So by what you say, pretty much rent to buy, right? So what that means is that, are you guys going out there and buy the house off with cash? Is that what you guys doing, and rent it back to the rentee?
In its most basic form, yes.
Okay. So because you guys are doing that, where you guys purchase the home outright, where you don't have to go through a traditional way of mortgage, so there's no interest in your part as well. So that get reflected to the rentee, which then you guys don't have to charge them the interest or whatever it is come with the usual traditional rent. But the difference is that you guys allow the rentee to rent and eventually own the home. Now, with that, how did you guys determine the payment, the monthly payment? So let's say a house is $100,000, and I reach out to you guys. I want to buy that house. I want to rent to own that home. How do you guys determine the monthly payment?
Yes, well, all clients would go through our affordability check. So you do get credit checked. We do run traditional credit formats, but the difference is we don't then use an algorithm. So if you've had a county court, I don't know what it's called in America, if you've had a judgment against you that negatively impacted your credit score, so you're having difficulty along a traditional mortgage avenue, that's not enough with us to get you rejected from our program. The most important thing to us is, have you the capability of paying your rent? Have you paid your rent over an extended period of time with only one or two minor hiccups. It doesn't even have to be a perfect track record, because there's lots of things in life that can make a difference and issues pop up all over the time. But as long as you have a good record, that's the most important thing to us. And we also look at people that have non-traditional work methods. So, for instance, I was speaking on an AMA yesterday, and one of the hosts was an influencer. So they had plenty of funds, but because their revenue stream wasn't what you would consider a standard or traditional revenue stream, they were having difficulties in obtaining a mortgage. Whereas with us, that wouldn't be an issue, because you can show that you've been paying your bills on a regular basis. So that would be the principal way of approaching us and getting onto the program.
Okay, yeah, I think that is an issue that we have over here in the United States as well. I was actually fortunate where I recognized the importance of credit score early on, and I bought a home early on for very cheap. So now I have a lot of equity in the house. But I do have a lot of friends that in their early days they were not very responsible with their credit score, and now they have had a job that's really paying very well, easily afford a home. But the bank do not look at that, right? Like you say, they don't look at the individual basis. They don't. They have an algorithm, like you say, and he cannot get a mortgage because of that. And he makes a lot of money. So I see that you guys are trying to fix that, and you guys have this. I guess the name of it is CVP, which is the KYC process for in place for you guys. In your project, where you guys look at the individual based on the individual basis, not just paint a picture for everyone. So I think that's actually very, very smart of you guys to do. And there are a lot of people that also have problems, like my friends, the friends that I have. So I do see the vision, the mission, and the problems that exist out there, and what you guys try to accomplish. Awesome job on that. But now back to my question though, Scott. So let's say when you say $100,000, right, where there's no interest, rent to own. So you get $100,000 just divided by, let's say for whatever year, and it gets divided by, let's say year 12 months, and you break it down to monthly. Is that how it works? If I rent, is that how it works? How do you guys determine the payment for the month?
Oh yeah, sorry, I missed that. Yeah, we would use a traditional format. So, say for instance, your traditional mortgage at the moment is 30 years. It's actually, we've got a breakdown in the white paper that you can have a look at, and we can run through later. But it would be over a 30-year period. So we would give the breakdown. We would look at that, but our payment plan isn't fixed. You have a minimum amount you can pay. Which most people will. But if one month, say you have an amazing month at work and you achieve a bonus and you want to pay a bit more, you're more than welcome to do that. So it's not just a traditional sort of like we calculate the 100,000 over 30 years, and then that would be your rent payment. That would be the minimum that it would take for you to achieve owning the home over that 30-year period. But then obviously everything else kicks in with this system that reduces that timescale. Hopefully that answers the basic outline of the question.
Yes, it does. And we will get into the details of those breakdown later in the paper there. Yeah, I mean, looking at the paper, you guys seem to figure out a way to really incentivize at all angles, even the rentee, to the holders of the tokens. Yeah, very well thought out, but we will get to that later. So let's talk about your pre-sale going on at the moment. So right now, your pre-sale is currently live, correct? And right now, you guys are trying to raise. If I look at the allocation properly, your pre-sale, you are dedicating, you guys want to raise 1,250 BNB. Is that correct?
We've changed the format. So basically, the reason why we've changed the format is because we have more real world utility online than we thought we would have at this stage. CVP we weren't expecting to be ready as soon as it would do. So that's going to generate revenue prior to launch. The energy brokerage is I don't know if anyone, works in that sector. The energy brokerage will be a business-to-business energy brokerage, so that will generate a substantial amount of revenue over time in itself. In the UK, because it's a UK business, it's the first one. We are looking to open elsewhere, but in the UK, the average salesperson's target is between £10,000 and £25,000 per month. If you then look at the overheads, so the cost for the line, the wages, etc., you're still looking at a substantial profit margin per salesperson. So that will also fund back into the tokenomics. So the figures we've looked at are a lot lower than the figures that are in the white paper, and we are currently in the process of amending all of that information. For instance, in the white paper still, that won't be rectified until probably tomorrow, the vesting schedule, you've got the old vesting schedule in there, whereas the new vesting schedule, because we are community based and we listen to our community, will be 20% at TGE and then 20% per month over the next 4 months, and that's for every level. So beforehand we had a 2-month cliff, over 9 months for seed, 6 months for private, and 4 months for public. But now we've just condensed it down because, again, we have more avenues of bringing revenue into the project sooner than we first anticipated, and therefore we're compensating for that by doing some restructuring.
Now, since we're on that energy brokerage, when are you guys thinking to implement that strategy? Is it right out the gate, or what is the plan?
Yes, no, we look to have funds coming in through the utilities straight away, and the energy brokerage is multi-purpose. So in the UK, with the way that our system's structured, wherever we have properties, every property with Owners Unity will have a portfolio attached to the property. So each property will then provide passive income for the homeowner in perpetuity. So if they pass it down to their children will gain passive income from the property. If they sell it, then the next owners of that property will receive passive income. The portfolio is tied to the property, not the individual. And we've done that on purpose because we want, bricks and mortar is one of the largest investments you can ever make in your life. And there's absolutely no reason with the creation of crypto that you can't have a portfolio and make your home provide you with passive income, which should offer an additional level of security.
Yeah, I think that's smart. I think it incentivizes people to stay as well. So with that change on the numbers on the seed sale and the private sale and the pre-sale, do you have the total of BNB that you guys will be trying to raise?
At this moment in time, we are looking to raise between 250 and 500 BNB in total for the private round.
So 500 BNB total for the private round. And what about the pre-sale? Do you have the number on that?
I think the pre-sale, I don't have the exact figures because we like to work everything out in formula, but we will be looking probably about double. So I would say up to 1,000 BNB in total. But that amount between now and when we go into pre-sale could also be reduced based on the revenue that's generated from the utilities that we have in place, plus We also are working on multiple other utilities, and if we can bring them online in a reasonable fashion, then that, again, we don't want to put the burden on you guys. If we can generate the revenue internally, then we will do that mainly, and then just have the additional revenue coming in, sort of like to help with the development side, whilst we are gearing up to get the rest of the utilities online.
Okay, so is it safe to say that the number of, I guess, homes that you guys are going to be purchased out for rent determined based off the amount raised of B&B?
No, not at all. What we're doing is a good friend who is a CEO of another project had a great analogy for it. And that analogy was that when you purchase a farm, you very rarely purchase it at harvest time. Most of the time, you have to till the soil, plant the seed, grow the seed, and then harvest. So when we first looked at our figures, we looked at the best case scenario, and the market hadn't obviously done what it did at the start of the year. So we were looking with those figures to be able to purchase properties from day one and then have people in situ in about 3 months. But when you look at it, it's not really fair to ask you guys to purchase the property. You might as well just go for a real estate investment trust or, fractionalized ownership or something like that. So what we're looking to do, because we are a crypto project primarily, is to build out the dual ecosystem and generate the revenue which will support you guys, and use the funds that come in to build out the ecosystem on both sides of the road, so to speak, and then the funds that are generated will go towards purchasing properties. And if you look at how much, we're not here to help people that want to buy $1 million home in the first instance. So we're looking to help people, that are trying to get on the property ladder in the first instance, or people that are having difficulties getting on the ladder. And there's a large portion of people out there, like you said, even your friend, that has a good income that can afford a decent home, but can't do it at the moment. We've targeted our figures based around sort of like mid-range properties. So, for instance, in the northeast of England, you can purchase a property for about $120,000. It won't take us that long to generate that kind of revenue, because we're not just using the crypto ecosystem, we also have real world functionality and use case, not just for the properties, but for the additional businesses that we're online in. The easiest way to explain it is, as a normal company, we aren't paying ourselves dividends or, bonuses. All of our funds are being redistributed. So like a traditional company will make profit, we're just not going to be greedy, which is part of the re-education aspect of it. You can still make money and redistribute a portion of that to you guys as the token holders. So technically you could consider yourself shareholders. And then obviously to the client, so that the money that they're paying into owning that property isn't dead money. So people that rent at the moment, when you spend the money, it's dead. You don't get anything for it. What we're doing is we are offering them the ability to gain something out of that money too. And then that obviously benefits them by reducing the amount of time it takes for them to own the property. So the original figures, which we are reworking, are based around us purchasing 2 to 5 properties from day one. But we found from our community as well, they're prepared to give us time build out the ecosystem properly. So we've reduced it to reduce the burden on you guys, especially in the current market conditions.
I mean, definitely, I definitely see the strategy with the tokenomics tied in and with the BUSD rewards and, you know, the kickback to the, like you put it, the Autonomics, and we will break that into later. But you just mentioned that, let's assume that, like you say, you guys are not depending on the amount raised to buy properties right off bat. Now, you mentioned there are two sources of income in the real world, which is the energy brokerage and also the your KYC system, CVP. How are you guys generating enough revenue in order to buy 2 to 5 properties right off bat through that?
But we're not. That was the whole point. The whole point was that by trying to place that much burden on people in this current market was an unrealistic aim. So what we've done, instead of saying we will put people in homes, if everything went perfectly and we did hit the figures originally, then we could have people in properties within 3 months. But you have to adapt, and you have to have a route for every eventuality. So what we're doing is we are building out the ecosystem. And like I said, if you look at our Autonomics, which we will do later, and I gave you an idea with regards to the revenue that you can get from an energy brokerage. It's not going to take as long as people would imagine to generate the revenue to purchase properties. And this is a generational project. So we're not just looking for, to be here for 6 months. We plan for this project to open new ground in the current market and offer an alternative that will then be available for all of our children, all of our grandchildren, great-grandchildren, and hopefully other companies will see the way that we have brought crypto into the real world with this type of utility, and we'll do a similar type of thing to offer additional opportunities. So it won't just be us. We might be the prime mover, but if we are successful, then other organizations are going to have to do something similar to us to be profitable in the real world. And that brings benefits to you guys, not only as investors, because you'll have more opportunities to earn money, but also it redistributes some of the money in the world. So instead of companies, having record profits like they're having at this moment in time, charging everyone more money and then making additional, record profits, that won't necessarily be the case, because we will have re-educated the business model so that some of the funds are redistributed, which is how it should be in the first place. So we are custodians of this idea, the concept. We are the custodians of this to move it forward into the real space. And we also believe, the team believes 100% that crypto is the future. Fiat is a system that can be easily manipulated, whereas crypto can't. But if we don't try to address real world issues that impact everyday people, then crypto will always just remain an arm of fintech, and it will never truly take the place it should in the real world by, moving us forward.
Yeah, 100%. So that's the reason why I really love the concept, and you guys trying to bridge the gap between the blockchain or crypto, like you put it, and into the real world. I think it's necessary for the space for mass adoption. I mean, it's really needed in the space. And I definitely see your concept. I mean, I see the vision, and you have a huge demographic out there that can actually utilize your platform, and they can really, change their life through the platform. It is very revolutionary in a way, 100%, and I love it. But the hardship I see is the initial capital, right? And I think because of the down market as well, initially you guys want to raise 2,812 BNB, which put you guys around 1,500,000. So with that capital, I think you guys can move things very easily. But I think if you guys are unable to raise the fund or unable to, I guess, the forecast of the revenue come from the other sources of income, like you mentioned, have you thought about, let's say, go to venture capitalists and get some money there as well, or is that something that you guys have thought about?
Yeah, we've thought about it, but if we do that, then it's all about leverage again. And we plan to be here for a long time. So if it takes us 12 months to start putting people in properties because we want to do it the right way, build a solid foundation and build from the ground up and, create a new format and a new business model that, assists everyone while still making profit, as a good business should, because it's business by volume. You can do something good, but also create business by volume. So this type of format, if successful, if you give people the option, would you like, to just live in a rented property and throw your money away, have a mortgage that if times go, bad, you end up with negative equity in the property and your rates go up if you're on a variable rate, or would you like the opportunity to utilize upcoming technical product and put it all together and make your money work for you? So we're looking at that. And with regards to the revenue, Owners Unity already is on the brink of having 3 utilities running. And we chose housing because it's something that's close to us, but also there is always more demand than supply. So even when the market crashes, you still have people looking to move into places. So there's still issues. So that's a pretty robust industry to be in, where you can help people, but you're also guaranteed that if you have property, you're going to find people to move in. So that should generate revenue no matter how volatile either the real world markets are or the crypto markets are. Energy brokerage, 99.9% of businesses and residential properties utilize energy. So even in the worst market conditions that can possibly be out there, those 2 industries, although they suffer, they're pretty robust. So they will always generate revenue and income. And that revenue and income, unfortunately, in bad times does increase because people put the prices up. We're looking to negate that by utilizing our product, but also then feed that additional revenue back into the system to generate the funds to purchase. So it's not a case of will we be able to raise the funds for properties. It literally is a case of when will we raise the funds for properties.
Yeah, I agree 100%. Through the reflections, and I see that you guys, and we will get into those details in a bit here, but I do see a percent that's dedicated to affordable housing, and that's what that's what it's for. But yeah, you're right. It's when, but it also depends on the volume, right? So you have the gap there between the slower time and the volume, right, where things kick in gear. And I think that by having you guys, I think the first home. I think once you guys have the first home, and I think it will paint a clear picture for the people, and they will definitely see the vision for sure. All right, so let's get into the tokenomics breakdown. Looks like right now you have 8% of the buy fee on the buy and 14% of the sell. You want to speak on that a bit there, Scott? The breakdown of it?
Yeah, sure. What we've tried to do is, and these figures will vary over time. We're very community orientated, and we plan to, look at things over time and make changes as and when is necessary. But we looked to try and find a balance between, investing monies and rewarding investors. So the half of the buy sales tax is obviously for you guys, because the more you buy, it also helps generate volume and holders that will assist us on the crypto ecosystem side. The figure of 8% and 14% we chose because a lot of products are looking to have higher taxes to give additional rewards to people to make it, more spicy, so to speak. But we've got the whole of our secondary and tertiary tokenomics to assist with that. The figures, the affordable housing, market and development, buyback and burn and liquidity pool, whilst those figures look like a small percentage, as we grow, that will obviously be supplemental. And that's what it's designed to be. These figures are designed to be supplemental to the secondary and the tertiary tokenomics. So they will add together to create a larger pool. But yeah, 8 and 14% was designed to hopefully get your day traders involved as well, because there'll be buy and sell volume in there, and also to reward our token holders sufficiently for a portion to purchase and hold the token.
Okay, yeah. So I do see that 2% affordable housing and 1% on the sell, and so these are dedicated to purchasing homes, correct?
Yes, it's not just the purchasing of homes. Eventually, we plan to build sheltered accommodation. It's something that's important. Also, HMOs, homes of multiple occupation. I know that's a different term in some other countries, because if you look at our format, which we'll go into, if you can tie a portfolio to any of the premises that we have. So for instance, if you've got people out there, vets, get treated shockingly in most countries in the world. You can put a sheltered accommodation together, and you can use the portfolio to actually fund the correct caring staff to be in there. So the physios, the therapists, and all that can be put in place so they get the right help and the right treatment. You can do the same for homeless people, for drug addicts as well. You can do the same for any of these people, and you can look to assist them and hopefully, help one or two of them, get back onto a path that they would consider an acceptable path. You can't help everyone. There's people out there that like being homeless. But the people that do want help, there's no reason why you can't help them if you utilize a system like ours. But yet again, that is the long-term goal, as well as building, houses for people.
So now I do see the 1% on the buy and 2% on the sell, on the buyback and burn, and this will be done manually, like you guys put in your term rebasing, right? So this will be done just randomly every quarter. Is that what it is?
Yeah, the community will be involved in that. So if we will put it to the community that we're ready to do a burn. If they want to delay it by a month, then we'll delay it by a month. We're obviously going to guide the project, but you should also take your community into consideration on certain aspects of what you're doing, as long as it doesn't impact the way that the project moves forward to any great degree. But you should always involve your community, because they're the guys that invest in you and have faith in you and work with you.
I like that. I like how you put it, in a way that does not impact in a great degree. I think that's crucial as well. So it looks like you guys do have buy and burn function in place. So what that translates to is eventually the token it is a deflationary tokens eventually. So over time, you reduce the total circulation supply, the total supply, and it increases the value over time. So that's good. All right, so that's just the basic. Everything else is pretty much basic. BUSD rewards. You hold a token, you get reflection back off that. You don't have to do anything. But you guys also have the staking as well before you guys launch the project. Now, I do not see the numbers on here. Is that something that have you guys put out those details yet in your Telegram room?
Well, the staking is, we do have the staking in part of the original Tokenomics, which shows how many tokens we've set aside for staking. It's a variable APY, which we've also put out there. And hopefully you will understand that until we have an idea of figures, we can't set that variable APY until launch, because then we'll know how much we're putting in liquidity, we'll know how many tokens there are, and because there's the whole formula that needs to be considered for the variable APY.
I understand. All right, so the contract, is the contract audited, Scott? And also the staking platform, I'm assuming that you guys will get that audited as well?
Yeah, we've got a gold certificate from Reflex Finance, so we've done the KYC. Our smart contract, also our staking contract, and also our pre-vesting staking contract. They are all audited, because although you can purchase on Reflex, we also have a direct vesting platform, and that vesting platform also provides APY on the vested tokens. Because that's something we looked at as well. I'm sure a lot of you guys are involved with projects where you've got in as an early investor, you've helped support the project grows, but you see the people that are purchasing getting all of the great APYs, etc. And you don't really get any, except for getting more tokens, you don't really receive any additional benefits for supporting the project. So, we took a bit longer than we would have liked to get that contract. It's much more tricky than you'd imagine, believe it or not, but we managed to get our pre-vesting contract with an APY on as well. So, everyone that invests in our token will receive an APY on the tokens.
Yeah, 100%. I think we all have been there, like you said. I think that may be a great selling point for you guys as well, trying to raise in the seed round, the private sale. By the way, how much did you guys raise on the seed?
We raised 109 BNB on seed. We were planning to launch or start our seed round at the start. And remember, we've not taken on any whales at this moment in time or anything like that. So we've not gone the traditional route, because we're a hybrid project, and we knew that we would have additional revenue streams coming in. That was the part of the whole idea. But we took in 109 BNB, and we started literally just after the market nosedived. So we were pretty happy with those figures.
All right, perfect. The C guys, that's awesome that they're able to earn, or the pre-sale even right now, able to earn the APY on that. So that's really awesome. All right, Scott, so let's get into the good stuff, the utilities. And but before we get into that, if you go to page 4, Mike, and there's a last paragraph there, second to last, where it says, Al takes any deposit plus the monthly payment and looks to create a profit on this with the token's unique ROO. Now, you can go ahead and explain that later. We can go into what ROO is. System and distribute the monies made in accordance to the specific tokenomics, see section 6. This allows for the clients to clear the outstanding balance in a significant reduced period, all while also rewarding stakeholders and holders, assisting in reducing homelessness and poverty. Now, so what's very unique is that, so if I understand it correctly, so the deposit of the rentee and the monthly payment, you guys are actually using this money to reinvest. Is that correct?
Every penny that comes into the business is utilized. That's the whole idea, is not to have any of our clients or investors' funds be dead funds, and we will expand on that later. But yes, everything that comes in is utilized to generate additional revenue.
That's awesome. I think that's a key point of this. For to incentivize people to use your platform and also to rent out your homes in a way, right? Because part of that, I guess you can call it reinvesting or utilize the money. Part of the money also kicks back to them, a percent, right, Scott? And let's get into that. What section should we go to right now in order for you to expand on those details?
It's section, I think it's section, if we start with section, because 8, 9, and 7, if we start at section 6 and we'll work through it from there. We'll keep it simple, and hopefully I'll explain what return of Autonomics is, because we had an issue because it's a new creation, it is a unique product. You can't really use the term return of investment because it's not just your investment. The way that the tokenomics, which is why we call them Autonomics, is structured. Like I said, we're trying to re-educate people out of the traditional business model, which takes your money and gives it to business owners and shareholders, and we're trying to structure it so your money is used to obviously pay the company to make sure the company trades and create a profit, but that profit is then redistributed to you guys as clients and investors in the system. So if you go to page 12 to start with, then I can run you through the good bits, I suppose. Would be, if you keep scrolling down. Yeah, one more, I think. And so this is the key thing. So, and this will be explained. So when these are the basic tokenomics, and we'll explain how it works a bit further down. So for every time we utilize our formula, this is the split. So just to keep the figures simple, say it's $500 is your monthly payment. That $500 is then put through our system, our formula. That formula then generates additional monies. We take the original $500 out. So that always goes against the value of the property. So whenever you pay $500, the amount of the value of the property is reduced by that amount. So you don't have to worry about that. Then out of the additional monies that are raised, the client, so the person in the property, receives 35% of the additional revenue raised. 5% goes to all holders, so all token holders, because some people don't like staking and we don't think anyone should miss out. So they also receive some of the secondary tokenomics. 25% goes to affordable housing. 12.5% goes to staked token holders as well. Then 2.5% is to marketing development, and 20% is to owners' unity for running costs. So that's the basic tokenomics for the secondary portion of our formula. Then if you come down to page 13, so the next page down.
Hey, Scott, before we go on, I just want to recap what you just said really quick. I think this is actually a very ingenious way for you guys to incentivize everyone to hold pretty much, right? So, if you guys are in the BSC right now, you buy the token, right? But they will utilize the money that from the rentee, the monthly payment and the deposit, and also they will run it through the system, or, if there's any profit made from that, the holders will get 5%. So pretty much you're holding the tokens. You get, not only you get the BSUD reflections, from the buy and the sell, and also you get the staking if you want to stake as well. which I don't see why not. But you're also getting a portion of from the rentees in real life, which is, I think, is a very ingenious way to tie the world, the crypto world and the real world together. So that's really awesome to see. So the owner's unity, that was one of my questions. So that's pretty much for the operations cost, right? For you guys to operate the business, that 20%.
Yeah, but there's also the 12.5% that goes to stakeholders. So 5% goes to everyone. It's distributed amongst all of our token holders, but 12.5% is specifically targeted towards staked holders. So that incentivizes people to hold the token as well.
And you also mentioned that 500 that will go reduce the whatever the amount of the money go against the house, no matter what, whether this becomes profit, in the plus or minus. Man, this is ingenious way to really bridge the gap, brother. I mean, this is, you guys really put some time to really thought this out. All right, let's go to the next one.
Okay, so the next one is obviously the two tertiary autonomics. So basically, the first one, it says out return of autonomics. So the 20% before, say, let's keep the figures simple. Let's say our 20% share was $1,000, but the running costs of Owners Unity that month was only $500. We don't then share the $500 out amongst ourselves. We recycle that and we put that through the tertiary tokenomics. So this part here would be the excess revenue from the Owners Unity portion that then gets reinvested in our formula and redistributed this way. So the client then receives 15% of additional funds. Owners Unity receives 45%, marketing and development 4%, affordable housing 20%. The reserve, which is another fail-safe measure, is 10%. Charity wallet is 2%, and BUSD to holders is 4%. That's the basic outlay. Now that 45%, remember I've said no additional monies goes to waste. That 45% for Owners Unity then also builds a reserve in case there are ever times when you have bad months and you have to cover running costs, not from the profit, because there hasn't been a profit, you've made break even or you've made a loss. Because realistically, and I think we can all appreciate this, anyone that tries to tell you that they're going to win every month from now until the end of time is telling you a little porky. So you have to have fail-safes built into the system. Okay. The next one, the client return of autonomics, is the 35% is then reinvested as well. Then that 35% is taken out, as in with the secondary tokenomics, and out of the profit, the client then receives an additional 45%. 15% goes to Owners Unity, 4% to holders. Charity wallet gets 2%, reserve 10%, affordable housing 20%, marketing development 4%. So it's all geared towards, the formula has been designed to make the most out of people's money, but without continually creating additional risk. So, we're not doing it ad nauseum, so to speak. And that's how we've designed it. And we think this is the perfect balance to reward all of you token holders and investors. So you get up to 7 revenue streams, 7 passive income streams. But the client also then receives, 3 different additional payments to help reduce the cost of their property. But the company's still making a profit. And we're still able to build in a reserve and fail safes, and also put money aside to build additional properties. So that's how that system works in its most simplest form.
Yeah, very clear. And I love the reserve. Like you said, you can you can't, in the market, it's not 100% proof, right? I mean, it has its good, it has its bad days, good days. Let's look at the strategies that you guys planning to get that, I guess, return on investment or whatever. Let's look at some of the strategies here. So that's on page 14, right?
Yep, that's exactly where we are. So strategy 1 is basically the secondary Autonomics, and that is our key formula. We have a formula that has an entrance and exit strategy that's fixed. There is a very small variable in the percentages for the exit strategy and the entrance strategy, and that's how we are confident that we can generate revenue either in a bull or bear market, because you can make money in either market as long as you've got a formula and you stick to that formula. So for instance, we don't care if there's a green candle that's, shooting up towards the moon. As soon as it triggers our exit strategy, we're out of there. Sometimes people might see it as losing an additional ×2, ×3 or whatever. But we've all been there where you've been caught candle watching, and then all of a sudden it's turned around and turned into a red candle, and you've lost the initial investment, and you're holding then for the next, 2-3 years, waiting for it to turn into a green candle overall. So that's the formula, strategy 1. Strategy 2 and strategy 3 are the basic portfolios that we are offering to be tied to the properties for the clients. So they can go for a traditional portfolio that has, your traditional stocks and shares, and 50% crypto, which we've given a breakdown there. But these are negotiable. But we feel that that's a good mix, top 5 cryptos, mid cap and low cap in that percentage, because over time that will generate additional revenue. Or you can go for what I would personally go for is the crypto strategy, which is Bitcoin top 5 and low cap to have a little spice in there as well. But they're specifically for clients to tie to the property. And then you've got your tertiary tokenomics explained there with the percentages that outline everything. And then a bit lower down, that shows you our combined reserve, because like I said, we're looking to build as many fail safes into this system as possible, and that reserve at this moment is made up of gold and Bitcoin 50-50. So we're trying to look to protect for either of the markets, being volatile or crashing or dumping. We're looking to have that additional reserve to make sure that everyone is safe. And by doing it this way, and we're scrolling down to the next page after we get through this, will help explain it a little bit clearer as well. We're protecting against the crypto volatility by having the real world funding coming in, because say the market has another event and it drops another 95%, buy volume drops off, the token's down, you're not getting your rewards. That's when a lot of people, get a bit unhappy, and there's no real way around that at the moment. But with our system, you're still receiving a constant level of rewards from the real world side of the business, because people are still going to be looking to move into properties, and people are still going to be looking to sign up for utilities contracts. So that revenue will be a constant, even if there's a market crash in the real world. Like I said, 2 of the most robust industries are your energy sector and your housing sector, because although individual property prices may crash, people still want to move into properties, so and still need to utilize energy. So that's why we've chosen those. And the next page, which you're on now, Bud, if you scroll down
before we go on, That's before we go on. So for those actually looking at the chart right now with the strategies and the traditional and the crypto, for those that may not understand what the 30% top 5 is, pretty much what they mean is that the top 5 coins in your coin market cap, right? Capitalization, market capitalization. The 10% mid cap is usually investing in a project around 2 to 10 billion around there, and your low cap is 300 to 2 billion. So that's what those means. That's what those number means. I just want to make sure that they know what the heck you're talking about there.
My fault. yeah, because we want the portfolios aren't designed to be a risk. Okay, those portfolios are designed to add passive income over time, and that's how you generate the passive income on the property, is by having a portfolio of stable projects that are also projects that should stand the test of time. Again, some of them may fail. There's nothing in life is 100% guaranteed, but if you have a diverse enough portfolio, then you can pretty much guarantee as much as you can guarantee that in 10 years the top and mid-range market capped coins will have increased in value, probably add another bull one or two in there as well. So that's the whole strategy. Not every token or share that goes into your portfolio is going to end up becoming a multinational company, but a fair portion of them will stay stable and will grow and provide additional income for the clients over time.
Perfect. All right, let's go into the next one.
Yeah, this is just to break it down, so it's a lot, because it sounds very complicated, but it's not, and that's the beauty of your system. Like with everything in life, the simpler it is, the better it is, because there's less parts that can go wrong. So although in the explanation it sounds technical to some people, to other people it doesn't. We just put this in there so there's a very clear breakdown that shows you just how easy and straightforward this is. So it says, return of Autonomics is Owners Unity's unique reward system, and it works on multiple levels to enhance, what you guys are going to receive and what the clients in situ will get for being involved in our project. On the left is just the basic, it shows the OU ecosystem additional revenue. So the OU ecosystem is our crypto ecosystem, and we're working in partnership with multiple other projects behind the scenes to create products that are all revolutionary and are all hybrid. So they work in the crypto sphere, but they also have real world utility. Because as I said at the beginning, if you don't move into the real world and show true use cases, we get nowhere. And they both flow into the secondary and tertiary Autonomics. On the other side, you've got you guys that would be the token holders, and you've got your rewards, which are the primary Autonomics and staking. And then that feeds into the reward system on the right. And on the left is the ownership and portfolio. So the Owners Unity payment plan is the client. The payments go in. All of these boxes feed into the secondary and tertiary. So the OU system, OU real world payments, all filled into the secondary and tertiary Autonomics. Then they filter out to ownership and portfolio, which is the one result, which is what the clients obviously would sign up for. And the other result is reward system, which is also what you guys in Owners Unity investors would have. So that's literally how simple it is. We throw everything into the formula, and then we reward you guys for holding the token. And we also, make sure that the clients get a property that provides them with a passive income. That's it in its simplest form.
Yeah, I love the visual, pictures and on your white paper, but that's actually, when you actually think deep down to it, it's actually a very simple concept, very simple. very complicated, but yet simple at the same time, because you guys are bridging the blockchain to the real world and incentivize pretty much every angle of every person involved, which is really cool to see. Man, I think we covered everything, Scott. Man, awesome presentation. Very well thought out.
Thank you. Can I just add one thing quickly?
Yes, of course.
With regards, for instance, the portfolio that's tied to the property is a vital piece of the puzzle, because whilst all of the tokenomics is reducing the amount of time it takes for you to own the property, for instance, with the energy brokerage in the UK, we can tie your utility bills into the portfolio. So the clients aren't physically paying for their utility bills, for instance. That's one of the angles that we can do, one of the things that we're looking at. Secondly, if you're laid off or, God forbid, something happens to you, you have an accident, in certain countries, like I said, there's no coverage. So a lot of people are left deciding, do I cover my bills or do I pay my rent? And that's how people get evicted. With our system, the portfolio, you can apply and the community will make the decision, if the information supports your claim, to allow you to draw down on the portfolio. So instead of having to face 2 to 3 months and then, get evicted, if you've built up a decent portfolio, that portfolio can support you until you've recovered and you get back on your feet. Then you start paying in again and you start building the portfolio up again. So it's an additional fail-safe. So like I said, we try and put as many fail-safes, not just to protect the company to ensure our growth and longevity, but also to protect our clients, because your home, in England we say an Englishman's home is his castle, and your home should protect you. That's what property should be about. It shouldn't just be bricks and mortar.
Beautiful. I think traditional way, if you get hurt, you can't go work, you pretty much lose your home, right? Your home goes into foreclosure and you lose your home because you cannot make that monthly payment. Now you guys also figured out a way to not pretty much taking away the principal that people are paying to until they can start paying again. And pretty much, yeah, I mean, that's beautiful to see. That's really awesome. Yeah, I mean, I see that you guys have really put a lot of thoughts into this, man. It's pretty amazing to see. We do a lot of AMAs with a lot of projects, and the level of technicality and the level of efforts that put into the project is, I mean, it's great to see. All right, Scott, let's go on and take questions. Actually, I do have another question. So, I mean, you guys have a team of extensive background in real estate, real life experience. Are there any businesses right now currently within your team that you guys are planning to tie into with this project, or with this project stands alone by itself?
Due to certain NDAs, I can't go into detail too much, but what I can tell you is we are working with other projects, and what we are producing as a group are a set of revolutionary products that will not only change the crypto space, because we're all about transparency, and we're working with a few other projects on the whole transparency and security in the space. So that will be there, but also everything that we're creating, not just with them, but with other projects, is about the hybrid / transitionary nature of the product that we're producing. So everything that we have will be utilizable in the real world and generate real income in the real world, which then goes into our system, as well as just generating revenue in the crypto world to go through the primary tokenomics and go into the system as well.
Okay, yeah, understandable. Yeah, I think, like you said there, I think the key is, if you guys ever decide to onboard another business, within the team, I think transparency is crucial for the for your community within the crypto space, right? Because oftentimes we see projects come in and exploit the crypto side of it for their benefits in the real world business, and that's never good. But I don't see that as your intention, and it's like you said, as long as you guys keep it transparent with the community, I think that's very important.
Yeah, we've got the incorporation certificates on our Telegram. So the energy brokerage, every utility, every real world utility, and we are bringing on more real world businesses are part of this project. There's no separation of the two. So at the moment, it's the energy brokerage and the property side, but there are other businesses which I can't go into, as I said, due to NDAs, etc., that we're looking to work in partnership with as well to onboard additional revenue streams and to broaden crypto's reach and to drive greater adoption of crypto in the real world.
100%. And as long as you guys are mindful and, have a system in place where you can display that financial, the revenue clearly to your community or investors, I think that's also very important. But I believe that you guys are very mindful of that. All right. So good spot. If there's nothing else, we're going to go ahead and take questions from the community. Wow, an hour and a half. Man, that went quick. A lot of information to unpack. So that was a good time doing the AMA with you.
Yeah, thanks. Yeah, we're ready for questions. Yeah, that's great.
All right, Mike. So Mike's going to come on. He's going to take questions. Before Mike comes on, so if you guys have questions right now, the voice is pretty much open. Go ahead and unmute yourself and ask away.
All right. Well, I'm not hearing anything from the community at the moment. We do have a lot of text questions, but if you do like to ask your voice question, please feel free. After I'm done here, unmute yourself and ask your question. So, Scott, first one comes from Shizu. His first question, out of 3 here, is, as housing is a global issue and also one of the largest industries that protects this what protects this venture from copycat projects both within and outside the crypto space, and what gives you the edge and the proprietary upper hand?
Yeah, hi. Yeah, great question. You can't really protect against copycats, can you? You can go through patenting and you can go through trademarking, but a concept is a concept. And as you said, it's such a massive global market. We want other projects to do similar things because that benefits you guys and it benefits the clients and it changes the way that the business model operates. And that's what we're trying to do. We have prime mover status, so that's usually an advantage. But we want other projects out there to do this because then the client has more opportunity, and that's what this is all about. The market's so huge. One company on its own doing this, it will take many lifetimes for it to have a scalable impact. But if over time, we can bring more people on board to the new business model that we're trying to promote, then we make real change. And I think that covers pretty much most of it, I think. If I've missed anything, Mike, you can let me know.
Absolutely, brother, and I appreciate the answer there. Second question from Shizu here is, what are the mechanics of a property? What are the mechanics if a property owner wishes to sell prior to the final payment? It feels like it could be complicated and over and above standard mortgage clearing.
Yeah, I did state quite clearly at the beginning that there is no mortgage and there's no leverage. So you wouldn't be selling because you don't own the property until the property. I hope I made that clear at the beginning, and through the talks I have said how it works. We are not a mortgage provider. We are not a loan provider. So we aren't looking to fit straight into the area of, competing for people that can purchase through mortgaging. We are looking for all of the people that are being overlooked due to the nature of the industry being more geared towards algorithmic approaches as opposed to individual approaches. So you wouldn't sell the property because you don't own it in the first instance. So, that's how we work.
Very good answer, yeah. Last question from Shizu here is, how many houses would you roughly need to obtain and sell before the project becomes self-sustaining? And what happens if the utility brokerage fails commercially?
Okay, good questions. Again, the utility brokerage, for it to fail would be massive, because I've been involved in the industry for multiple years, and we already have a portfolio of clients that we can utilize. So realistically, the only way it would fail is if we hired the worst salespeople in the world and didn't train them. But saying that, if it did fail, remember that it is only one aspect of the project. There are other aspects. Like I said, there are other real world companies that are coming on board. You've got the property ownership, and you've also got the crypto ecosystem that's generating revenue. So, if one aspect of it fails, we've built fail safes in there to try and negate that impact overall. With regards to how many properties it would take for the business to be or the project to be self-sustaining, again, it's a case of taking out one aspect of the whole and trying to apply a formula that covers the whole project. So it's not just solely about how many properties will make the project self-sustaining, because as we grow and we build out the real world utility as well as the crypto utility, that is what will generate the self-sustainability. Putting people in properties is just an additional aspect of what the project is. So whilst, yes, putting people in properties to us is important, it's a revenue stream for you guys. So whilst we're doing good things with crypto, as investors, you should look at this as a additional revenue stream, along with the energy brokerage, the additional real world businesses we're bringing on board, and the ecosystem that we're building out.
Terrific. I love that answer, Scott. I appreciate that. So next one is coming from Angel. And I'd like to also add, by the way, T-Bot. I'm sure he's on your team here. He's been slamming out a lot of these questions on text in our main chat here. I appreciate you, brother. But coming on to the next question here from Angel is, what type of ownership will a client have on his premises during his loan? I guess it's more of a question is, will he be able to alter his property during his loan? Not loan, but during his renting before he owns?
Yeah, I'll be honest, I don't really understand the question. I'll try my best. So as long as you stay within the owner's Unity ecoverse, you can upgrade. So for instance, if you've built up, just say $40,000 in your portfolio, the value of the property's gone up by 20 grand. So you've technically made an additional 60,000 equity. If you then wanted to move to a larger property, you can take all of that and put that towards moving into a larger property. But if you decided to leave, said, I want to move and I don't want to use you guys anymore for whatever reason, you don't get to take the funds that have been raised and put into the portfolio or the equity with you. We would just move someone else or look to fill that property with an additional client, because we're not loaning and we're not doing mortgages, and the property doesn't belong to people until they achieve the figure that is agreed in the initial contract. That's what's important. We're not trying to offer a mortgage or a loan or anything like that. We are not a mortgage provider. We're not a loan company. We are simply putting people into properties that don't have the opportunity at the moment. They're renting anyway, and we're giving them the opportunity to turn that into home ownership with a portfolio.
Hey, Scott, I think what they're asking, if that wasn't it, I think they were wondering if at any time while they're living in the home, if they want to do, say, like upgrade the kitchen or something like that, or add an extra bedroom or square footage.
Right. Yeah, that's what I was thinking as well.
Oh, yeah, they can do what they want.
And I think too, to add on top of that too, I mean, I think Scott's talked about it a little bit here, that portfolio is going to be there for the client. I mean, consider it, I mean, here in the US, consider it similar to like a 401k or a health savings account. That 401k is there for that homeowner to utilize. So, you know, if it's a situation where they want to do an upgrade, they've maybe been in the house for 10 years, they got a decent portfolio, they want to put 10 of it into the house. Sure. I mean, that's helping them out, obviously, in the future. That's all, they're putting it towards the house. That's also helping, you know, say worst comes to worst and they wanted to leave and stuff like that, then that's helping owners' unity and the people that invest in it too. But we really are trying to make this as much for, you know, the investors and the people that purchase out, but also for, you know, the true purpose of this is to help the people out that are trying to buy a house, make the biggest investment of their lives that they couldn't do without us at this time or at that time or anything like that. So we're looking out for them. We want to, you know, give them an opportunity to use that portfolio if maybe they were to have some kind of hardship medically or something like that. Or if to say they were to lose their job, the last thing we want to do is for them to have to, you know, leave the house, or if they can't pay their rent. I mean, that portfolio should be there as a, you know, as a blanket, like not most of us, but for a lot of people in the US that have health savings accounts and have 401ks, those can be utilized as some sort of a, you know, net to catch them if anything were to drastically go bad. That's what we want to provide for them too, that they're truly going to have something to support them through it all, through anything that they may need it for. And a lot of this too, and Scott can go into a little bit more detail, some of it too will also be brought to the community to vote on, to decide what, you know, what they can use that portfolio to, and whether it's, you know, something that's sustainable or something that's good for owners' unity and for the client.
Yeah, just on top of that, T-Bot, if they're going to refurb or do anything to the house, that ties into another product that we're looking into, which touches on 3D modeling and the metaverse. But I'll leave that there.
You just have to throw that little tease in there.
Little teaser, exactly what it was. We didn't hear about that.
Well,
but yeah, T-Bot.
Yeah, no problem.
Go ahead, T-Bot. I'm sorry.
No, I kind of mentioned it a little bit earlier, and there's so much to cover. I know these AMAs, we have so much that we can go over with it all, but there's an integrated system that, you know, some of the team members have also worked on to kind of tie it all together as well. And I kind of put it in the text chat as kind of like an Angie's List type thing, where there's even more utility that kind of ties it all together, where the, you know, person that, you know, is purchasing the home can look at their portfolio. They can contact contractors to bring in, you know, Angie's List makes a whole bunch of money by basically referring out people and getting scores and all that kind of stuff. There's going to be something that is also worked on our back end that will kind of develop that even further, and truly, you know, the grand scheme of it in the very end, and Scott talks about this, is to have a, you know, a blockchain run home, something that's fully integrated through everything. And this is with the gas and power and everything else. I mean, it truly is a kind of a CRM that can, eventually tie it all into the house, into that large investment that you're making, and make things easier for everybody.
I see it. I love it. Being a contractor myself, with your utility here that I'm seeing, is you're 100% right. You could tie every single utility that comes into a property into it. You could tie construction itself, all aspects, into the utility. You could tie even exterior landscaping into it. There's many possibilities. I like it. All right, moving on to the next question here from Dustin. We'll take a few more here, as it is getting a little bit late for us. And I do encourage any questions asked tonight, head on over to Owners Unity's Telegram to ask any questions you'd like. I'm sure the team, like T-Bot here, he's been very helpful tonight. Been answering pretty much a lot of these questions, which I appreciate it, by the way. But yeah, next one is coming from Dustin. I noticed in the white paper that you are a rebase token. I see that you're doing a manual buyback and burn to reduce the supply. Is there anything in the contract for a mint function to add tokens to the supply?
No.
Short and sweet, I like it. All right, next one comes from Alex Costa. What benefit would a client have by going through Owners Unity rather than a mortgage company or a realtor company? As far as I understood, in terms of funding your project will depend on the number of people participating in a way. So how do you plan to deal with the situations when someone will decide to leave the project for any reasons? How will that reflect on the other participants? And in terms of compliance, as far as I got, your project allows people who are not qualified to get an ordinary mortgage to invest into a property by means of crypto. So how do you plan to deal with the authorities, for example, if they raise a question on where the money is coming from?
Okay, great question, and I'll just try and clarify again. It's not fractional ownership. So you're investing into a crypto hybrid ecosystem. One of the utilities of that ecosystem is the property aspect, along with the energy brokerage and the other features that will come with this. So there's no investment. The company itself, Owners Unity, is not investing your money into property in any way, shape or form. We're generating the funds by having multiple revenue streams. So you are investing in the crypto, but we've got the real world coming in and we're generating the revenue. You then get your rewards for that. And we then obviously build out the property aspect of it. It's not based on the amount of people that invest, because we have external real world utility. So, if, for instance, like I said before, the crypto side slowed down, we will still have revenue coming in from the real world that will be supporting the system. That's part of the additional fail-safe. With regards to if someone moves out or leaves, of course, people are going to move out and leave. We will hopefully be in a position, and we are already in a position, where multiple people want to take on our product. So for the short to mid-term, we don't see an issue with putting people in properties, because we already have people that want to be placed with us. So that will cover that. But if they did leave, you could sell the property, reinvest the funds and work forward that way. With regards to regulation, we've already approached the FCA in the UK, which is the Financial Conduct Authority. We've run the process past them. They are fine with what we're doing. So we are compliant. And it is a very simple product. I think the problem is sometimes people try to overcomplicate it because they can't quite. It's so simple that people don't want it to be that simple. So, your brain, because the way that we're all taught to look at the way the system works, puts blocks up. On the other side of it, I think besides Ethereum and Bitcoin, the rest, every single crypto out there is classed as an unregulated security. So the SEC can come down on literally any crypto out there at any time when they see fit. What we are doing, we're not going to poke the bear, but part of what we're working on as well, which is why I said it's a hybrid transitional type of project, is we are looking at additional products that fuse this process together a lot tighter, that we can take forward and we can approach regulatory bodies. We have zero problem with being compliant in any country, and we are looking at some point in the future to be compliant in every country. We want to take crypto out of the darkness and bring it into the light. If you don't move crypto into the mainstream, and mainstream involves regulation whether you like it or not, if you don't do that, crypto never gets to achieve its full potential. And we are already in the process of building out products that take us there. But it's a transitionary process. You don't just go straight from the unregulated Wild West that we live in at the moment to being fully regulated. You need other projects to bring this forward. And the SEC and other bodies aren't going to bother with people like us until we make enough money where they can make some money.
All right. Appreciate the answer there, Scott. I guess that kind of leads me to my next question here, is about any partnerships. Do you have any currently, and do you have any locking for the future? And what type of partnerships are you looking for?
Yeah, thanks. That's a great question. We have a lot of partnerships on the go, and we're looking to work with similar-minded projects. And there's a lot of organizations out there that want to bring transparency and security to this space, but they also want to give back to you guys, the investors, and they also want to create greater adoption by looking outside of the crypto space. So whilst we are building products, we're also looking to partner with companies that already have great products, because, you need to work with other projects to move the space forward. So, for instance, Vault Finance, Return of Avalanche, RMC are our partners. We've got an affiliation with Everrise. I've spoken to Shieldcoin, as you can see if you read the CVP documentation. There are also other projects like Ember, Bank Finance, and there's more out there that we're working with to grow the space and move it, like I said, towards a more adoptive kind of platform.
Perfect. And definitely with a project like yours, it's 100% needed to have these type of strategic partnerships. So I appreciate that. I'm going to take one more question. Go ahead. Absolutely. Go ahead. We can hear you.
Now, I'm in Australia, so I don't the aspect of the home and all that type of stuff resonates with me as a utility, but it doesn't resonate with me in Australia. I won't be able to use it. But the crypto side, 100%. Now, my question is, you had seed sales, so there's a private sale. So will you be having the private sale. Will you have a fair launch sale? If you do, when will you guys be launching? And what do you think your market cap will be as well? What are your plans to have it as when you launch?
Yeah, great question. I missed the start of that. I do apologise. You said something about it wouldn't work in Australia or something?
No, you're based in the UK. You're probably targeting the UK at the present moment with all the utilities that you have in your crypto slash bringing the real world in. You know, it probably will. I mean, I'm sure someone's going to grab this concept and try to launch something like this in Australia, or you guys will try to bring it out here. I didn't hear the beginning of it. Maybe you do already. I don't know. I'll stand corrected if you do. But like I'm a crypto investor, so even though I drive a truck and all the rest of it, I like my crypto. I like my rewards. I like having tokens which have reflections, especially in BUSD or a stable coin, not the actual native token. So so I'm keen in this. I really like the reflection side of it. I just want to know. Basically, I can get in now, but when will it be live so I can reap the rewards, so to speak? You know what I mean? I can just sit and forget, and whatever happens to it, so to speak. In a good way, of course.
Yeah, buddy. No, that's a great question. Two of our team who aren't as dedicated. No, they're asleep. I'm joking. They're from Sydney, so we've got access to real estate, legals, local councils in Australia already. Part of our team is Australian. So the team's based in Australia, the UK and the USA, and India, in those four places. That's where the team's based, and we've got little teams and we're looking to build out from there. So we do plan to be a global product. We are looking to launch in September. It was the 3rd of September. It might be a little bit later. The reason why we're looking to launch now is because the way that we're designed and set up is with the revenue that we generate, we can obviously snap up a lot of tokens cheap as well. And then that will build portfolios for people and generate more profit for you guys. Because if the market's down when you get in, there's a lot more upside in this market than there is downside. So that's one of the reasons why we're launching when we are. Market cap, if you look at the tokens we have, we're looking for it to be somewhere about 1.25 to 1.5 million. But that won't be circulating market cap. That's for the whole, obviously, total supply.
What about your liquidity pool? Where does that get generated, and will that be locked for a certain time?
It will be locked in perpetuity. What we're going to do is we have an affiliation with Everrise. So wherever we have liquidity, we'll lock it, but we're locking it with Everrise because we've been in discussions with them since the beginning, and also it offers additional security for you guys, and we can go to the community if we want to make changes, and as long as you guys agree with what we want to do. So like say we are going to increase the percentage of liquidity, because if you look at the tokenomics, we've got multiple different avenues feeding that. Then we can come to you guys and say, we want to increase the liquidity by X percent. You guys say, yeah, that's a great idea, as hopefully you would do. We then go to Everrise. You guys have voted in our favour. They allow us to make the adjustment. So it's additional security for you guys, because no one can touch the liquidity, and no one should touch. There's no reason for anyone to go anywhere near any liquidity at any time unless it's to put additional liquidity in. So by locking it with a third party, you guys know that the funds are secure, and you also know it cannot be touched.
Okay. Cool. I did have another part of the question, but I forgot what part of the question. I'm doing multiple things: driving and unloading and asking questions. Yeah. Anyway, all good.
But just pop over. Listen, we're always open to questions, so just pop over to our site, our TG, and when it pops back in your head, or if anything else pops up, you ask, we answer.
No worries. All good. Thank you.
Appreciate the questions, brother. Appreciate thank you for that answer there as well, Scott. I'm going to take just one last question from the community here before I kick it back to Seattle. And it's from Survivor. It's a staking question. And ultimately the question is asking is, will you still be able to earn your rewards while staked?
Yes, there's no reason not to.
Plain and simple. I love it. All right, Scott. Appreciate it tonight. Very well orchestrated AMA. And I'm going to kick it back to Seattle.
Hey, thanks, Mike. All right, Scott. Well, man, I love the vision. I love the strategies. I'm actually really surprised myself. You know, I don't really say this, but I'm actually really surprised how slow the pre-sale is because I think this is a huge concept that's needed in the industry to disrupt the industry. And you have a huge demographic that's actually looking for you guys out there. I guess my question is, Scott, why did you guys go through is it Reflex Launchpad? Honestly, I have not invested a project through them yet. Why not to like a more bigger Launchpad where you have more visibilities and awareness?
Yeah, because we like to keep our word. And when we were first formulating everything, they came to us. They've been very supportive, and we said that we would use them. And we've, you know, a lot of projects, and I'm not saying this in a bad way, but you've got to remember where you come from, and if you don't have your word, you don't have anything. So we will be staying with Reflex, but we will also be looking to partner with larger projects. But you don't leave people behind just because you've grown if you don't have to. You know, you can still share the love, so to speak.
I agree 100%. Would you guys entertain, like, let's say, consider launching an additional Launchpad?
Yes.
Okay, sounds great. Perfect. All right, Scott, I think that wraps everything up. If you don't have anything else to a closing statement or last word for us, I think we're going to go ahead and do the prize giveaway, the cash giveaway, which you don't have to be here. But one thing that we usually like to do is we like to let our community go over to your Telegram and says, Great AMA at USA Crypto Group to raise awareness to your Telegram. Is that something that you want us to do?
Yeah, feel free, buddy.
Perfect. Well, with that said, Scott, man, I love the vision. Like I say, thank you for being here and the rest of your team. And if nothing else to say, you guys have a great night or a great day or a great evening, wherever you are.
All right, superb. Thanks very much for your time, guys. And we hope to see you over at Owners Unity soon. Take care. Bye.
Thanks, everybody, for the time. Really appreciate it. Thanks, guys.
Thank you. Thank you. Scott, I just need to clarify before I get into the giveaway here. Was there any whitelists that you were trying to give away tonight as well for the community? All right.
He may have walked away. But, you know, we're actually kind of, I mean, it's public right now. So over on the Reflex Launchpad, it's public right now. You can head on over there. It's obviously the kind of pre-sale round just after the seed or the private, but now it's gone public. So feel free to head on over there and, yeah, kind of get things started. And I think, and just to kind of add to what Scott has, you know, kind of said, I think it's tough in this space right now where crypto seems to be, you know, it always has its little runs of kind of running towards meme coins and stuff like that. And with kind of the downturn that we had and now this kind of brush with meme coins, I think it's really tough for some people sometimes to not hear, hey, you're going to 100x in the first, you know, month or week or something like that. Like, we're truly building a company to, you know, change the landscape and build things forward. So sometimes they think, okay, I can put, you know, $100 here towards XYZ coin and maybe 10x it, or I can put it over in Owners Unity and, you know, maybe in a few months once things get rolling and they purchase their first house, and then I can start to see those revenues come in. So I think it's kind of it's worked against us a little bit that we're actually trying to truly, you know, build something that is long term. You know, we want to build something that when we start getting, you know, 10 homes that are paying, you know, their rent or their payouts into us, or 20 homes or 30 homes. I mean, that's once the ball starts rolling on this, it's really going to just explode. And then once people start seeing, BUSD rewards come in and all that other stuff, it really is just kind of one of those things that it's inevitable. It's just getting started, getting things going, and then it just, goes on.
100%, yeah. And the things that last in the crypto space these days are the things that generate, like you guys, a solid foundation before trying to run. Like, walk before you run, in a sense, right? And
well, exactly. And it too. I mean, we could, with the connections that we all have in our industries, we could probably go out there and find those investors that are willing to, put down $50,000. Get a few of those, you get your first house, and then you get things rolling. The problem and the vision that Scott and everybody really had, and Sal have, is that they want the community to drive this. That's
Right.
why the votes go up to the community. That's why, everything's run through decisions made by the community, is because they don't want to change things for the usual investor who's, making money from the big banks and has $50,000 to throw around, or even more. If we have to go to that to supplement a little bit of it, we have some ideas to not necessarily kind of work with them and giving them a whole bunch of Owners Unity tokens, which then they dump at some point or something like that. But we want the community to be behind it all and help, those people out, help the people that are truly in it for, the business and for the company, then the space that we're trying to change, instead of, those investors that just want to get their profit back and get out as quickly as they can.
Right. I appreciate the vision and the transparency, T-Bot. I do. And again, I just want to thank you for jumping on a lot of those text questions tonight. You did awesome, brother.
As you can tell, Scott and I can talk about this for a while, so it helps to answer as many as I can.
Can I ask another question?
I agree with you, T-Bot. I think, with you guys, I don't think the people in the space are used to see a project like this where you guys connecting the blockchain to the real world, right? And from reading the white paper, it can be very complicated for them to understand. But I think once you have the first house, and I think everything will literally, kick everything in gear. Man, great concept. I really hope that you guys succeed.
Oh, we appreciate it. Yeah, I've told Scott this many a times. I'm like, once we get that first house and we get, a month or two of the tokenomics rolling through, and we're able to go, to the community and be like, look, this is what we've done. See this family, you don't have to, obviously there are, we can't tell people they're, what's the word I'm looking for? Basically, we can't give out their information or anything like that. But once the community starts to see the families that we're helping, the people that we're helping get into their homes, once they start to see their, how their portfolio is growing, how BUSD rewards are flowing through, all that kind of stuff, it really is kind of something it'll generate its own hype and truly start to, make a dent in the space. And we've gotten the question before several times, what about, banks aren't going to be happy with you? Lending agencies aren't going to be happy with you. Like, how dare you? You're going to get into their space. They're going to find a way to ruin you. And the thing that everyone has to remember is that we're not going for your typical, we're not going for the person who's looking to buy a $500,000 house and just wants a better rate, or doesn't want interest on it, or just wants to, use our system to buy, their vacation home somewhere. Like, this is for people that go into this space, they go to a bank, they go to a lender, and they say, yeah, we'll lend to you, but you're going to have to put down 20%, and you're going to have to, pay this interest rate. And it doesn't make sense when they're already paying, sometimes $1,000 a month for an apartment. They want to buy a house with that same $1,000 a month, which should afford them a nice size home. But the bank says, no, that's not enough. You haven't shown us enough good faith, or your credit report is bad, or something like that, and turn them down. Or they lock them, or try to lock them into a variable rate loan or an FHA loan or something like that just isn't good for the buyer long term. And so these are things that I've, as a real estate agent, I know a lot of lenders that have people that they denied. I've had a lot of clients that I've sent to several lenders and they keep getting denied for one reason or another. These people and other agents in other areas will be able to, kind of work side by side with these banks and kind of get referrals from them. I mean, people that, maybe go to our site that are looking for a home, but are already, well off and they can get a loan from anywhere. We can use them to, work through our agents to refer them to those banks. And then those banks can refer people to us that can't get loans. So I think that there's a very good chance that this could take off a lot more quickly than we're ready for. And that's why we're really trying to take our time, ease into it, make sure everything's ready to go, and then kind of move forward at a good pace.
Yeah, definitely. I definitely see it. You definitely see it taking off for sure. I was actually a little skeptical, but once I really dissect the white paper and the level of detail you guys put into the strategies and, the treasure or the safety net, to making sure everything will work out okay in in facing hardship situations. Yeah, man, very well thought out. Love the project. Again, I'm really surprised how the pre-sale is going very slow. And I think it's a matter of marketing, to be honest with you, a matter of awareness to the project. All right. Well, I think Mike, he's ready to give the money away.
One of my favorite points of the night, guys. All right. I got $75 I'm going to be giving away to the community tonight. $25 to one random attendee is here. $25 to a best question, which I will sift through accordingly, all the questions that's been answered and asked tonight, as well as Seattle said earlier, which Johnny did in the main chat, drop a Owners Utility Telegram link. Community, head on over there, say great AMA at USA Crypto Group. Keep it random and transparent. My daughter right here next to me will go over there and pick one of you guys randomly in about 10 minutes. Thank you all, and let's get this rolling.
Hello.
She says hello.
Hello.
Yeah, he says hello. I got my headphones on. No one can hear you, bro. Augustine, congratulations. Won yourself $25 tonight. That is it for the whale. Like I said, best question, as well as a random joiner to the Telegram group of Owners Unity. Great AMA tonight. And T-Bot, like I said, again, I appreciate it, brother. Scott's no longer here, but for the record, so you can hear it later on, I appreciate you as well tonight. Everything was well articulated, and it was a very amazing AMA. Probably could have kept going for another hour, I'd imagine. But maybe we'll have you guys back in. Oh, I'm telling you, so maybe we can have you guys back in the future as well.
The funny thing is, I do a lot of these AMAs, and man, I get tired after like an hour. But man, I can keep on going talking about this project because just the level of detail and how I love when the project really take the time and really thought out every single angle and it's a real legitimate project, real legitimate concept, that can disrupt this whole industry. Actually, I wanted to disrupt the industry. Well, not disrupt it, but I think the demographic that you guys are targeting, which are the people that have a hardship of getting a mortgage to a traditional way, huge.
Well, it's something that everybody, it obviously, it's still something that everybody dreams of. To own a home, it's your biggest financial investment, usually, that you make in your life. And especially for the people that we're targeting. But I even said it to Scott when I first kind of talked about this. I was like, can I put my home through this? I was like, can you imagine whatever you pay in a mortgage if you own a home? Let's say it's $1,200 or $1,500. What if you put that towards something like your 401k? Something like some kind of health savings account where the money is put in, invested, reinvested, all that kind of stuff, and you build up not just the equity in the house when you finally buy it and purchase it, but also you could take, let's say we get another crypto boom here in the next few years. 2x, 3x, 4x. Some of these projects that, may be invested in, whether it's, or even Bitcoin and stuff like that. Taking a $500 payment that pays back into your portfolio, that same $500, that's Not that it's going to do it for 30 years, but that would cut a 30-year loan down to 15. Imagine taking a 30-year loan and paying it off in 15 years.
Well, that's the great thing about it.
Yeah.
I heard questions that, asking whether, what if a person wants to move, etc. The way that you guys set it up, I'm not sure if people would want to move.
I mean, well, that's
passive income coming in.
And people go, well, you're how do you know that the algorithm and all that kind of stuff is going to work? I'm like, let's say worst case scenario, it doesn't work. Let's say it strikes out 100% of the time for 30 years. You still get the home at 30 years, what you would normally do. You'd normally get the house at the end of the 30 years. You got it. It's done. But the great thing is your payments don't have interest payments on top of them. So you're paying less than what you would have paid with a traditional mortgage. And the house is yours with whatever appreciation that has been built in it for the last 30 years. So it really is. I told Scott, I was like, can I do this? He's like, well, it's not, you're not really our target audience. And it's like, but it's such a concept that's so easy to understand, especially, I talk to people here in the US and compare it to a 401k or the, health savings accounts. I'm like, it makes sense. Like, why wouldn't you want your mortgage payments going towards something that benefits you and helps you pay it off sooner rather than giving it to a bank who uses it to lend other people money and buy other homes, or frankly, give it to their investors, which are our token holders. They're giving it to their people that are invested in those big banks, whether it's Bank of America and stuff like that. They're giving that money to the people that invest into that bank and to obviously purchase other things and lend out money in other places. Here, it's all within the system of Owners Unity. It's all within the system of crypto. It's all within, where technology is going eventually. Probably not going to be in the next 5 years, but it's eventually going to get to a point, and we all can kind of see the writing on the wall if you're investing in crypto, to where this is the next step. And so kind of being at the forefront of that, helping people that are in, rougher situations, that aren't saving as much money, aren't putting as much money away. I mean, now you're paying less. You're basically renting to own a house plus building a portfolio, which you may not be doing if your company or job doesn't offer a 401k. So it really is kind of a no-brainer to me, but I think it's a little too much. You're saying kind of our private sale and everything is not where obviously we want it to be, but it's tough for people to, in our space, who are investing to make money now, to understand that, hey, even half a B&B or one B&B here in time is going to go a long way, especially as this company builds out and really starts, developing clients.
That's the hardship about the BSC space is that, it's like you said earlier, people looking for that quick 2x, 3x, 5x right out the gate, right? And that's all based off the pressure of the pre-sale or the seed sale or the private sale, And I think that's being reflected into your pre-sale right now because you have an amazing concept. Amazing. I don't say this a lot actually on AMA, but this is actually real stuff here. But I think this is what the space is for. It's tough, especially the BSC. But I think I see why you guys are doing it in the BSC because for the tokenomics reason, the reflection reason, couldn't do it, can't do that in other chain. But that's the hardship that comes within the BSC space. So.
Yep. We'll get there. I have no doubt. I mean, it's pretty simple, self-sustaining. I mean, we don't need much overhead for it. It's not like we need some big, warehouse full of people answering phones and doing stuff like that. I mean, it's maybe eventually one day we get to a level like that. But I mean, for the foreseeable future, for the next 1 to 2 years, I mean, if we can get to, 5 to 10 clients by the end of the year, or going into next year, kind of do 10 to 20, stuff like that, and really start ramping things up. I mean, there are going to be copycats out there, sure. But like Scott said, it's a big world out there, and there's going to be plenty of room for everybody to kind of interact. And if we're pushing the ball forward, if we're moving it, to that area, then that works out for everybody.
100%. Yeah, Scott. So, I mean, like once you've done an AMA with us, I mean, the room's pretty much open for you guys to give us any updates, right? You do have a thread in the announcement channel. So if you have any updates, man, just drop it in the comment section, and it reflect onto the main room as well for our community to see. Yeah, you have our lifetime support, brother.
Greatly appreciate it. Thanks, guys. Really do appreciate it a lot.
Perfect. All right. Well, I think I gotta go. I think we're gonna go ahead and wrap it up. I appreciate you being here again, T-Bot, and everyone's listening.
No worries. Appreciate it, guys. Thanks a lot.